Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 3rd of August. Starting off with the FTSE 100, which looks a little bit as though it is in a backward or downward situation. We've got a potential rising wedge there, the rising wedge there from back in May. Top of the wedge there up to 92.50, which was and is a potential target for the end of this month. But obviously, after Friday's price action, where we test the floor of the wedge around 90.30. Another end of day close below that June uptrend line could take us back down to the 50-day moving average 88.80. But at least while we're above that 90.30 area on an end of day close basis, the show not quite over for the extended bull run that we've had since the early part of April. Moving along to the DAX, and here the situation rather more fraught. We gap down through the 50-day line, which is never a good look, and the next support down looks to be around 23,000 rather than the 23,500 area that we were hoping for from old March resistance. RSI has also tumbled right down to 38, so it looks as though we will get that 23,000 zone target, even if we then rebound again after that. End of day close back above the 50-day line is the first sign that we are looking just at a little bit of a one-day wonder, although the way that 50-day line is now falling is rather disconcerting. The Dow is next, and I suppose this is the culprit of all the mess that we're in at the moment, given that the reason for the declines were related to the tariffs. So the Dow gapping down through the floor of the recent range down to the 50-day line, which was our sort of worst case scenario target, 43,400. At least we managed to close back above that. We still have the risk of a move down to the floor of the rising trend channel, 42,500, before this sell-off is complete. And obviously we had the further failures at 45,000, which rather delay the idea of hitting 47,000 plus by the end of this month, which is what we were potentially looking for if we'd had a quick push through 45,000. Onto the cryptos, and when things get a bit negative on the equity markets, we tend to go a bit risk off, but so far we managed to bounce reasonably well here at the crypto situation on Bitcoin, 112,000, the old May peak, and that's kind of where we bounced so far. 50-day line also at that level, and an uptrend line there from April, also adding to the bounce at 112,000. The only thing missing at the moment is the way the RSI is still below neutral 50 at just under 46. So if you are looking for a fresh leg to the upside, maybe you want to see another up day and the RSI getting through that 50 level before you decide that Bitcoin is back in business. Otherwise, I suppose for aggressive traders, buying at old resistance and assuming that becomes new support would be the way forward. Worst case at the moment down to 107 and the floor of that rising trend channel from back in March. Onto Ethereum, where there were hopes that it might start catching up with Bitcoin, though. Although so far we have not done that, we managed to fail below 4,000, which it wasn't a great look, and also gap down from recent peaks above 3,700. Current situation is that this market is trying to find support at the old January resistance around 33.50, but as we said, slightly disappointing. The only plus point, or a plus point, is the way that the RSI has bounced off neutral 50. So those who believe in that particular signal, RSI 50 rebound, will already be assuming that the worst is over for this market. Obviously, we were looking for up to 43 or 4,400 by the end of this month, but assuming that we would get a quick push through 4,000 early in August. On to gold, and here we're looking at a situation where we're hoping for this market to find support at the floor of the rising trend channel there from back in April. Bit of an overshoot on the downside, but we're simply back in the channel now, and helped along by the way that the RSI is back above neutral 50 as well. And we're also back above the 50-day line, which is a help. So it could be a bear trap from below the 3,300 level, which could still take us as high as 3,800 by the end of this month. That's the top of that rising trend channel from back in April. But I think 3,800 is still the best case scenario. In the meantime, we'll try and break that 34.30 level, which we failed at on numerous occasions. If we do break down, hoping that we won't get anything worse than 3,200 on a sustained basis. Onto the stocks, and not quite as exciting as maybe they should be at the moment, but a punchy call here at Distil, where it looks as though we've got a rising trend channel base. We found support above the 200-day line, with a sharply rising 50-day line there. And the view here is that while we're above the floor of the channel there, 0.13, that channel there from March, looking for the top of the range and up to 0.35, perhaps as soon as the end of next month. No news for GS Chain, but we have seen the shares bounce nicely, unfilled gap to the upside during the week, and initial target here towards 0.9 pence by the end of this month, if we stay above the floor of the gap there, 0.46. Stock which looks as though it's coming back into business is Gem Resources. Here we've got a situation where we've just broken that line of resistance there from January. We've been consolidating above a rising 50-day line near the low, which is normally a sign of actually not only a rebound, but actually quite a sharp rebound possible. 0.47, the level of the 200-day moving average. We're looking for that while we're above 0.2 and the 50-day moving average. The other point to note is we have an extended RSI rebound at neutral 50, which also tends to be a leading indicator on the upside. So high hopes for that one, even if the stock doesn't quite know it yet. Kazera is next, and here a rising trend channel there from July last year. Top of the channel there heading for 2.5 pence. We're looking for that by the end of this month, especially after the way that we've had three very strong candles over the latter part of the week, opening at the high, closing at the low, and unfilled gap to the upside on Friday above rising 50 and 200-day moving averages. So it looks as though, as I said, this is ready to go. Stock which I never heard of is next, KRM22, which is quite an achievement given that I look at almost every RNS every day, but this one sort of slipped through the net, and here we've got the beginnings, hopefully, of a rising trend channel base. Top of the channel, they're heading for 70 pence, which we're looking for as a best case scenario by the end of next month, and hoping that in the meantime, the recent May resistance of 36 pence acts as support, as would the 50-day line at almost the same level. Another relatively unheard of situation is at Litigation Capital, and although we are still bumping along the bottom, we had a great hammer candle on Thursday and a very strong candle on Friday, opening at the low, closing at the high. So we're expecting further gains beyond 30 pence. Worst case is probably the floor of the gap there around 35. Best case up to the top of that rising trend channel base at 51 by the end of next month, but probably just going for something in the mid-30s, which would be a nice gain from current levels. Onto SolGold, and here we've nearly approached our second target, which was around the 11.75 pence level. Obviously, the next level up, the top of the range, 13 pence. We're looking for that by the end of next month, or hopefully much sooner. Moving along with the list, and it's Tiger Royalties, where it's been tough to try and work out where the shares are actually finally going to bounce. We still have the shares below RSI 50 at 45, which is means we're still waiting, and also below the resistance line there from last month, around the 1.9 pence. Probably the safest thing would be to say that we can break the recent resistance around 2.1 pence, then we should be on our way for a retest, or at least a partial retest, of the best levels of June towards 5 pence. Key here is staying above the 200-day line at 1.3 pence, whatever happens. Next is Vaultz Capital, and here you can see that we've got, even though we had the fundraise, etc., on at the end of the week, we've broken recent neckline resistance at 9 pence. Above that, the minimum on the upside should be 13. Best case by the end of this month, up to 27 pence, especially as it looks as though there is a turnaround in the making here. The only thing missing at the moment is that the RSI is still below neutral 50s. It's one or two people might want to see that above the 50 level, as opposed to 47 at the moment. Finishing off with a stock which is not normally in our remit, but here it is today, Virgin Wines. Here we've got the shares gapping up on Thursday and following through on Friday, so it does look as though there's enough gas in the tank here to get up to 80 pence for the stock, especially while we're above the 50-day line at 61 pence. I believe there was some positive news on Friday, or rather Thursday, with the shares or the company topping its the consensus, market consensus, in the wake of its full year trading update. That's it for me today. More updates tomorrow.